The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman this Thursday, September the 3rd. Ooh, had to work that one out. And welcome. And, of course, love being here Monday through Friday, market days, going through the market, trying to extend the knowledge base that we try to give you here at TFNN Educational Network. And let's just go through the numbers. We've got the Dow up 180 at 16,532. What does that mean? Well, it means, let me just go to this chart right here. What it means is that downtrend line right there, let me just show you, this is what I show my subscribers every day. One of the reasons why we were looking at this and thinking that based on that extraordinary down move Monday a week ago, 1,000-point move just in one day, that the oversold condition still needs to be worked off to the upside, and that I had shown the dashed line as a symmetric wedge, the percentage angle of the uptrend line and the downtrend line are very similar, and that a piercing of the uptrend line would be very important, and a break of the downtrend line would be very important negatively. One is positive. What the one says is that the histogram, these little vertical lines that you're looking at here, this is the 0% line of the MACD, the moving average convergence divergence. And what we're looking at is that this green line, the fast moving, the 9-period differential, which I call the fast moving average, is attempting to cross the slow. And we've got a MACD minus 339.77, and the MACD average is minus 327.47. So we are really close to seeing that cross positive. Now, what would happen is if it crosses positively, that's good. But not until you break the high on the left side of peak A at 16,669.97 does that become a very influential marker. Two reasons. See, the stochastic is way lower here than it was before, and that says that the stochastic at 44% is okay. It's just not, it's not very strong. And price is the determinant of trend. And at this particular point, above the 16,476 9-period exponential moving average, that maroon line, with a 7-period moving average running sharply, all we can say is this is part of that H, lowercase h, see, sharp down move, makes an arch formation, holds way above the previous low of 15,370. In fact, this low is at 15,979, 1st of September, and we've had two beautiful inside days, and today we went above that candle high of 16,528. We're at 16,532, up 181. I'll go into this in a little bit more detail. One thing that I must mention, I like to talk about when it's positive, we had a very low reading. We've got one again today in the short-term trading index, the Richard Arms trading index. I use it just using specific numbers, and that number was 0.32 yesterday and 0.31 today, and that invariably says that there should be a pullback in the Dow to a negative action. There was almost a pullback that was looking like it would work, and then out of the blue you got this big spike this morning, and we've been rallying ever since. This could be the first day of a miss. In fact, what I normally do, not normally, for a while now what I've done is I've X'd out, because otherwise how do you remember it when there's a mistake? And you can look at this. How many times have been X'd out? Once, twice. Very few times has this Chapman wave trend gauge failed. Even yesterday, when the 5.52 high in that index indicated there should be a cumulative with a $2.01 high of the 31st of August, and then the 552 high of the 1st of September. You said that's a cumulative action, and there should be a pretty sharp move to the upside, and that's what we've got. All right, let's go back to our story now. And you can see that the VIX is down at 2381. It is The previous high was 58. What did I say? It was 53.29. This has been cut in almost cut in. I don't know. Yeah, no, more than cut in half. So that VIX index is also indicating that there's buying pressure. So as a result, for my subscribers, what we did is we've been going long, and we went long 3 stocks today. And fortunately, each one is up a really nice percentage. And these are stocks that were going to multi-month, in some case, multi-year lows. So I just had to take it. The weight of evidence was that they should at least have an opportunity to rally. And let's see if they get that opportunity. Well, they take the opportunity and run with it. All right, let's run these numbers now. I'll run them with the charts. The Dow, I'll do it again. INDU. The Dow is at 16,528, up 177. It needs to break above 16,669 for leg B. The weekly chart, that 2 very long wick candles usually implies that you're going to try to move to the upside, and at some point those wicks will be filled, but it takes a little while to work off that oversold condition. And remember the Chapman Wave Roman candle, very important candle. And what it says, I said that I'm going to treat it almost as if it's a daily influence, not just a weekly influence. So what I'd said is any 2 to 3 days of consecutive closes above below 16,000, that would trigger a sell-off that should take the Dow down to the 15,500 and then down to test the low of 15,370. So we're going one step at a time. It's just a monthly candle with 2 days into 3 days, trading days into this candle. We've got to look at it in a different way, but that candle is potent. Let's look at the S&P, and then we'll take some calls. S&P.X. So the S&P is up 23 at 1972. It needs to clear 1993.48 for leg B. This is just an arch formation that maybe it's going to go higher, and I'll talk about that as we move along because there are a number of things I want to look at. I just want to do the QQQs up 0.90 at 104.81. They need to break the round number 106 to really break out in the leg B. The comp index is up 42 at 47.92. We'll go to gold, and let me see what gold is. Gold is down sharply. Wow, down 960. You know, that arch formation. I've been talking about this lowercase pattern. Just learn that the market is made up of 3 patterns: a straight move up, a straight move down, or an arch, or a cup formation. And the arch and cup can be V's, but basically it's the same thing, going up and going down, or going down and going up. Okay, so gold doesn't look very good at all. The TLT is holding in. It is at 121.29, up 31 cents. It is trying to form some kind of a base with a magnet of 122, what is that, 122 tens as the 200-period moving average, and 122.27 as the 9-period moving average. I think bonds are just stuck here for a moment, and that the yield's going to be stuck in a range. I'll talk more about that tomorrow because tomorrow is Technical Friday, and I want to get into that a little bit more in the nitty-gritties. Let's look at the dollar, and the dollar really is superior. It is the currency of choice. It's trading in leg B, and I said a push into the 96.30s, and then I changed that, and I said, no, I'm going to make it the 96.60s to 96.70s. If it can get into that area, it has a really good chance of breaking this downtrend line in the weekly chart of 97.37 within a week or so. We'll see if it doesn't form an arch formation. For the stochastics at 69, I'd prefer 80%, but it's good. But the MACD has turned positively with the price, and that is a good setup. The 50 to 95 area is very strong support. Let's go to Ben in Tallahassee. Ben, thanks for waiting. How are you?
Great, Basil. Thanks for taking my call. I got to jump into a meeting here, but I thought, to me, at least from the history that I've worked with the daily charts.
Yes.
Just the daily, and you look at all the popular ETFs, the IWMs, the DIAs, the SPYs.
Right.
When we're trying to go up on extremely light volume, and the stochastic hasn't really budged past the 50, 40, just keeps lingering. It just feels to me like we're very close to some kind of a downturn, because it's been on the daily chart. We're looking at several days now trying to go up, right? I mean,
so
3 or 4
let
days.
me just talk to this. I'm going to talk to this. I know you got to go real quickly. I'm just going to make it real clear. The pattern I'm looking at suggests that there's a strong arch formation. 199.84 is the level to take out to start a leg B. This is the SPY, trading at 179.58. Now, I'm just going to make it as clear as I can. There was, in fact, a spike to the downside with a spike to the upside, which is a Chapman wave technique. I didn't circle it here. I've circled it in other places. I actually wanted to go a few days into September, maybe into tomorrow, before I can really talk about it with much more specificity. But this candle with the huge wick of the 24th of August, where the volume was 507,244,000, I'm not even sure. So that spike, you know the technique that I have that I call a volume spike low? And that says to me that there is a chance that you can go 28 days to the upside without taking out the 182.40 low. That's number one. I really wanted to talk about it at the end of the week because I actually wanted to combine it with the weekly chart, but you beat me to it. So all I'm going to say to you is that the dip on the first that went down to 190.73 was sharp enough for me to say I still believe that this is a retracement failure mode, but you've got to be careful. There's enough energy and enough rotation into formerly failing sectors, hugely failing sectors. And in this particular instance, it says that there is enough technique that I can use here to give you very specific parameters. So let me just do that. So the downside, I don't disagree. I just disagree on the timing. I think this is going to stretch a little longer to the upside. It's not necessarily the V-shaped recovery that would take it back to the 210s or the high that was made at 213. But I think there's enough energy to go to the test the 199.84 level. That's 2 points higher, over 2 points higher. That's number one. And number two is the pattern that I'm looking at says that 201.73 should be very strong, a trend line resistance, number one. And number two is if in the next 2-3 days there is a failure, that failure has to take the SPY below 190.73. Wow, it's going to take a lot to go 6 or 7 points down to really fail at this particular point. And that volume spike says to me, be careful. You could be making, and I'm going to do this, I'll do this for you. If you've got a moment here, let me just do this before the break comes. I'm going to extend this to the right, and I'm going to show you that you could be moving in a pattern that resembles this large H that goes to a lowercase m pattern that eventually tries to test 205, the 200 period moving average, but that'll only occur if within, by today, Thursday, by Tuesday, when we come back from the holiday, by Tuesday, Wednesday, the latest, you've broken 199.84. If it fails to do that, then I think it's just sideways action with a lot of support in the 192 area. So, Ben, I know that you had to go, but I hope I covered exactly what you were looking at in terms of volume. That volume spike to the downside. I'll know a lot more tomorrow, but I think it's kind of a very informative measure for me. We'll be back, folks. The Dow's up 161, S&P's up 21. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. And just real quickly, SLW was a question in the Den. Silver Wheaton, it's trying to form a base here. If you're looking at the charts, gosh, I used to have this all notated. All right, let's just do this. The low was 11.22 on the 26th of August. And then 11.24 on the 2nd of September. So it's trying to hold. If it breaks underneath that key support level, if it closes underneath 11, well, let's just say $11 in the next 3 days instead of reversing, and it has to go above today's high, which was 12.25. It needs to get to the 12.20s by Wednesday of next week. It actually needs to get to the 12. What did I say in the Den? I typed it in. It has to get to the 12.20s, but the 13.50s is absolutely imperative within about a week and a half, 10 days. If we can finally get there, that'll be the change that you're looking for. And silver wheat, at least in the short to intermediate term, will be starting a move to the upside. Hope that helps you. The other questions of the Den, I'll try to get to them later. Let's go to Ilke in Boston. Hi, Ilke. How are you?
Wonderful, Basil. How are you?
I'm very well, thank you.
You look great.
Oh, well, thank you very much. I guess it's all it's all that darn exercise. When I go to the gym and I'm at all those different instruments, I'm there and I'm counting the seconds and the minutes. It's with dread that I do this. And then I go off and play tennis for 2 hours, and it's too short. It's those exercises where you don't chase the ball are just terrible, but at least I'm doing them.
Well, you look very healthy and you look wonderful. It's great to see this.
Well,
Yeah.
thank you very much. I haven't heard those terms. Wonderful. Very well. Thank you. Okay. Let's get down to the nitty-gritties of facts. You'd like to look at what?
Let me just finish something. I think I agree with you regarding the market. I think something of a little bit longer stretch than people are estimating. I'm seeing for just higher retracement before we go down, and that could be the surprise that people, because the move down was so strong, and we really are going on very low volume. So
Yes.
but I think they may extend that a little bit longer. I'm counting on it as well, because I'm in my longs right now, short-term longs, and trying to get into on the short side.
You see,
so
can I just say that I believe that thinking at this particular point is probably the right bias to have, because the type of sell-off that we had on Monday, with newspapers everywhere continuing, not just on Monday and Tuesday, but also into Wednesday and Thursday, and even earlier in this week, we saw the Boston Globe still continuing to harp on how your portfolio, watch out, buckle it, even had buckled your seatbelts. So I suspect that we've got to get rid of that. And at tennis, everybody's just been real quiet. Nobody's spoken about the market. And my suspicion is that there's still a lot of nervousness, and we just need to get rid of that. That's all. So I think the upside is, for the general market. We're rotating, but there are some sectors that are starting to show some life that they never showed before. You'd like to look at what?
So I'm trying to look at euro in a sense of a little bit longer, not as of now, but maybe October, November time frame. So evidently a little bit longer time frame in comparison to dollar, only because I'll be traveling, so it's a little bit selfish of me to look at it thinking, what should I do? Should I buy some currency now here, exchange it in the States, or should I wait because the dollar will show some strength while I'm traveling to Europe?
Okay, so let me just show you something. First of all, the euro, I'm looking at the euro continuous contract, and that's not, they get smoothed out, but the highs and the lows are correct. It's just the price sometimes changes. That made a peak D in the recent move up on the 24th of August and has plunged to the downside under the 9-period moving average. The weekly chart has gone peak A, B to a C and pulled back, and the monthly chart is in B. If you don't mind, I'm going to go, because I've got it all notated here, the euro-dollar currency pair, because the patterns are pretty much the same. And you will see that in this particular instrument, you made a peak D, a peak E on the 24th of August, plunged from the over 1.171 to where we are now at 1.10 in that pattern I call the Eiffel Tower, which says that the very big, this is the important support level will be in the 110 area, 101, and that's going to be very important. But more importantly, this is what I was trying to emphasize just a moment ago to Ben in Tallahassee, that patterns can last without breaking to the upside. You can hold lows for a long time. This is a great example where back in, was that March? Back in, March, the week of the 20th of March, the euro-dollar currency pair went to 1.047, started a move that went to peak A, peak B, made an arch formation, successful one. Let me just draw this trend line in. You'll see exactly what I'm talking about right there. Oh, there's a break. Wow, day's going quickly. So give me a moment. Can you hold on?
Oh, yes.
Because this is a really important pattern in the Chapman wave methodology. So we'll talk about that coming up in the weekly chart of the euro. It looks like the daily and the 120-minute chart of others. I'll be right back with you.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We are back, and I'm just finishing off this chart right now. Let's take it to there. Okay. So what we're looking at here, this is the continuous contract, and I just want to put the new parallel in, and that takes you all the way to there. So it's a little early. Okay. When we're looking at the euro in the larger context, so I finally finished, redid the euro contract. It is a peak E, just as it was in the euro-dollar currency pair, and that was at the high of the 24th, and it's really come down sharply. This looks like it could give you an A to B equals C to D, the lightning rod decline, and if that's the case, the most important level of support is the 1.102. Now, your question really pertains not just to the short term, it pertains to, is there enough strength that within, let's call it the end of September, beginning of October, that the euro dollar has actually found support and is actually trying to head towards a leg D, which would be above the high of the week of the 28th, above 1.1718. So here's the question posed to me, and I'm going to try to give you the answer. The answer is that a lot rests on the, I'll give you the currency, the euro parameters that I'm watching on the continuous contract, and that just says simply a close below 1.0817, the low of the 24th week of the 24th of July, said you've got to anticipate more weakness, number one, that's a close, more weakness. And number two, it says that the level of 1.11 to 1.12 is really strong resistance. If within a week and a half, the dollar started to come down and the euro is trading above today's, this week's high of 1.13. Let's call it 1.14. It really needs to garner some strength. If it goes to 1.14, that improves the weekly and it improves the monthly. It doesn't make it great. It just says the monthly can go on even longer in a trading range, almost like bonds can go on longer. And if you don't mind, I want you to show you that the dollar is very powerful. I've got it at 96.58 right now. Maybe it's a little bit somewhere around there. I'm delayed on this particular instrument. But the weekly chart is making that second cup formation. And that's the reason why I said that if this can break into the 96.70s or 96.80s, anywhere around there, you've got to be thinking that that high that was made recently in August of 97.07 is going to be challenged. Already, a lot looks like it should be in the daily. It's the weekly technicals that are not great, but the MACD of the monthly is really the harbinger of the bigger trend. And it's saying this has just been a 5 or 6 months consolidation, and the 9-period moving average hasn't been broken to the downside in the close. It has been broken intra-month. So the dollar is really your instrument that you've got to be looking at. And so far, the dollar portends higher prices. Have I answered some of your question?
Oh, you answered a lot of questions. So that means we can travel to Europe and we'll feel a little bit better about it.
You know what? You can travel to Europe and you can have prawns. Don't they have prawns? I remember South Africa used to get prawns. Here you don't. You get, what do they have? They have...
yes, they do have the black markets, exchange. Is that what you're talking about?
No, prawns are like shrimp, something like that. I can't remember exactly what it is. Yeah.
Oh, okay. I thought you were talking about stolen currency.
No, I was elevating your travel plans. In fact, let me do this right now. Prawns. There we go. Prawns are like difference between prawns and shrimp. Yeah, it's a prawn. I think if I remember correctly, I never ate them in South Africa. They're bigger than shrimp.
Well, yes, but I don't know about that menu in Europe. I mean, being so spoiled in America, it's going to be very expensive to get those big prawns. If I But anyhow,
it's a long time between then and now, and I can only tell you this: that the dollar is going to be the big influence. It's a big influence on many factors, and at this particular point, it's been a tremendous up move since the low that was made on the 24th. And most importantly, you've got 1, 2, 3, 4, 5, 6 big green candles out of the 8 that we've had. So I think that the weight of evidence just at this particular point still points to the dollar being stronger and the Europe. And it's not saying it's going to break out to all-time highs. It's just saying that there's a chance that the dollar could challenge the recent high of the 7th of August up at the 98.33 level. That's the first big resistance that it's got to get to. Hope that helps you.
Oh, it helps a lot. Thank you so much.
Okay. Thanks for calling.
Have a wonderful long weekend.
And have a great weekend as well. Thank you. Folks, let's go straight to Mark in Denver. Mark, how are you?
Hey, Basil. How you doing?
I'm well, thank you.
Good. Wanted to ask if you think the IBB is kind of topped out here, or if it's got longer to go before we look at a short.
Okay. So let me just clarify what we're looking at, folks. This is the IBB, which we always refer to affectionately as the IBB, but in fact it's the iShares Nasdaq Biotech ETF. So there are 2 other ETFs that have biotech stocks. The IBB is the one I focused on most importantly, and we are still short in my opening call newsletter from the 393.10 area, just off the top. And I've kept that position, and we've traded in and out with the shorts and the long, whatever it is. Now, what's really important about this, I believe, and I've said that for quite a while, that the IBB has made a top of significance. It is a top that gives me what I term a hat-trick top. What I mean by hat-trick top is if you go through each instrument, the 120-minute chart gave the first sell signal. Then the daily came in. The daily was at 400.79, and it came in at peak D right on the 20th of July. and we went short 2 days, I think 3 days later, and it's been coming down and went all the way to 284. That's a huge move to the downside for this. Look at that monthly candle with a doge. This is the Chapman wave Roman candle. Most importantly, the weekly chart and the rally that is, it's not performing like some of the others. It had a great move from the bottom up to the 350s, and now it's stalled. And look at the weekly chart. Fantastic candle, and now it made a fractional new high, but it's struggling. Even today, the Dow is up 137, the S&P is up 17, the NASDAQ is up 30 points, and what you've got is that the IBB is down 36 cents. I think that this is, so the daily, then the weekly gave a peak F top with almost an Eiffel Tower straight down move, and that makes a rally very important here to hold because I don't think it's going to hold, and the monthly chart has a peak D. So you've got the 120-minute kicks it off. The daily then says, okay, the rudder is turned. I'm going to make sure that this changes direction. The weekly says, oh, I'm struggling. Finally, the weekly turns, confirms the move. And then the monthly is the very last. And by the time the monthly turns down, you've usually had a pretty significant price and time move. And in this case, it's more price than time because it's only 2 months. But that's my suspicion. Look at the MACD turning down in the monthly. Look at the failure of the unbalanced volume, that blue line, and the stochastic has a right shoulder failure in the monthly chart. I believe this is serious. And not only that, Boston's become the hub internationally for biotechs. They have a real serious problem. For the last 5 to 6 weeks, all I've seen almost every other day is a situation where there's a report, and the report is a negative report on some biotech companies. Either the takeover isn't working or a particular drug is finding that it's the confinement of its sales to specific groups is going to be challenging to them. Just a whole bunch of things are coming out negative for the first time, or the response has been negative for the first time. And I think yes. So here's what I'm looking at. The IBB at 345. I think it's real close to giving some kind of a signal. I would not be surprised if you've got patience. That's the 345. If you wanted a 3 to 4% risk reward for a big move down of 12 to 15%, you could nibble here, shorting the IBB, or maybe just taking smaller position in the BIS. But I think I'm going to try to have a little more patience because the market, the waves that are coming into the upside suggest that, yes, you could get a little bit more of a bounce in the IBB. I like to time it to the best of my ability. And at this particular point, I'd say if you wanted just a small position in the IBB as a short, it's just like a starter position. The best place would be 353, 358, and 362. And if it goes higher than 362, this is going to soar to the upside somewhere around the 370s. I don't think it's going to do that. So those are the levels I'd be looking at. And 368 is the 200-period moving average. In the 120-minute chart, that is 23 points away. That's about 8%. I just don't think it's going to do that. This is just my opinion. So how you time to get in, I think, will be based more on your risk reward. Because if tomorrow or the next or Tuesday it starts to fail and all of a sudden it's at 340 or 339, that might be it for most of the up move. Maybe there's 3-4 points left on the upside, but now you're looking at the arch formation with the MACD probably deflecting lower. So answers your question, I prefer to wait a little longer just for the best risk reward. I might have to jump on if it starts to fail here and breaks 342 or 340 support. I might just have to start a position. I'm going to try to have patience because we've had some really good moves before, and I'm going to remain as long as I can. I'm going to try to remain long with this core position. I hope I can remain short for the next 6 months at least. I'd like that. Who knows? But does that answer your question a little? Okay, so that's Mark. Mark in Denver. So IBB 345 right now.
Thank you.
Yeah, so the risk is like 7 or 8 points to the upside, but you're looking at a retest of the 284s at some point over the coming months. Okay. So I don't know. I'm not sure how you want to trade that. You know what I would do? If you use options, I would buy a put option, just one or two put options to get my position started in case it suddenly tanks any day now. That's one way to do it.
Okay.
Hope that helps you.
I do, and if you have time before you shut off, if you want to take a look at the VXX, I'm short that, and I was wondering what you think about that.
The VXY?
VXX.
VXX, okay. The VXX, you're short that. That means no, if you've shorted that, I think that's good because that's VXX trading at 25.96. It's right on the support of 25.60. Folks, this is the iPath S&P 500 VIX short-term trading index. This is different. You see, this went to ABC, just like the VIX index. And I don't know if it's hinting to me that you've got to be real careful here. Look at that pullback from the 53.29 in the VIX index down to 24. So the TVIX is what we trade very often. That made the peak D that I'm looking at. You know what? I think it's because we're only a week and a little bit away from the big low that was made on the 24th. I'm going to try to have patience. I think now it's more time than maybe price, but between 13 and 12 is kind of support. I would not be surprised if there's one test of the 11s in the TVIX. So that would suggest that VIX index, if you don't mind, I'll go to that. Yeah, that the VIX could test 22 to 20, somewhere around there.
Okay.
I'd have patience. Both of them, you know what? This is just a period to have a little bit more patience. Maybe when we get back next week, we'll see whether or not it's time to reshort. But at this point, there's just enough energy to say those bounces like today can be quite vicious to the upside, especially in a bear market. You know, I believe we're in a bear market. And if you're in a bear market, rallies are vicious because they squeeze the shorts and new people come back in and say, oh, man, I should have been long. Why did I get out? And they go back in and bam, they get hit. Hope that helps you, Mark.
You're great. Thank you.
Thank you very much. So, folks, I want you to do this. I had a question. Yesterday I did ATVI, whatever it is. And then I was also asked by a subscriber if I would look. He's been long for a long time in Finera, core optical transmission equipment. And what I'd said is hold the position and make a stop on at least a little bit. Money management is really important. And this was yesterday when I grabbed it quickly and I didn't have much time to look at it. And I said it was at the low was 21.50. And I said under 21, I think 21.20 or under 21. But if you have patience, rather wait for the low of 21.08 was the low on the first. And I said, if it starts to trade under 20, that's where I would take off a little bit. Even if it rallies after, that's okay. Because what it says, you've got to be careful because there are two fighting patterns here, the up channel and the arch formation. And if it starts to break that low, you're looking at the arch formation and it's got a peak E already, INFN, trading at 22.35, up 30 cents. And that monthly chart is still fabulous. But I think that the story is done for now. That's not to say that this is going to be a hat-trick top like I spoke about in the IBB. What I am looking at here is that there could be a trading range set up between the highs and the lows, and I probably won't go to the highs, but it's more the upper portion towards the 25.24 was the high 2 weeks ago, but I'm talking about somewhere in the 23.60 area as the high. I'll even make that a little lower to show what I'm talking about right there, and 20, what did I make that? 23.30s to maybe 23.80s as a high, and the low of 18.35. I'd say that this moving average right here, this is the 32, it's the 32 period moving average right there. That could be the support of, why doesn't it show me? 1939. So I just wanted to show that there are still some stocks that have internal energy. This is one of them. But if it starts to break down, take something off, and then we will discuss it a few days later. So I got to that. Basil Chapman, Tiger Technicians Hour. I had a couple of other calls. Takai, we'll look at that as well.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Hi, folks. Basil Chapman back. Don't forget, got great programming here. This is the time you want it right now. This is a very important time to be able to glean some information that you can look at, see what is something you might have missed, a sector you might have missed, or whatever it is. I'm going to do this. I had a great question about from one of our listeners sent to me yesterday. I didn't get to it. And the question was, are we getting closer to France and the other European countries with stamps, food stamps, etc., etc.? You know, I don't want to get into all that. I will get into it later in September, maybe early October. I will get into the whole thing, the whole political aspect. I just don't think it's worthwhile now. I don't want to take time. So the question was Takai, well, I've got it here, TKII. It's trading at 13.51, up 25 cents. We had Travis calling very often. He had gone out of stocks that he had. Fabulous, just position playing. He did his homework, did everything right, and saw fantastic gains. Then he moved the money over to Tokai Pharma. TKI, and it's trading now up 25 cents, but it's gone from the 11s. And he said 11s is where he's trying to put his position on, and he was going to add to it. And I said to him, well, this was before it pulled back. I said, just be careful that it could be pulling back here. And these biotech stocks have a rhythm to them. Look at the rhythm of the big up moves and use that partly and with your fundamentals. That's what can help you, because he's the one that's just done fabulously. And look, here it is at 1351, nice entry point. And it hasn't broken out. It stopped dead at the 200-period daily moving average. It's in leg B. But the weekly chart is starting to form this base that's really important. It's not a cup formation. It's a rectangle. When you break out of a cup formation, you can have very nice upside projections. With a rectangle, all that I can do is produce a one-to-one upside move. That's the only way I've got it in my technique, and that's still pretty darn good, because that can take you from another 8 points higher. But I usually take it starting off not one-to-one from the high, but one-to-one from an important moment, and that would be the 200-period moving average. So that's 22 over a period of time. But it's really important that it constantly holds the 10s all the way through this market period. The 120-minute chart just made it a peak D. So yes, I think great. Your ideas of buying the pullbacks is just terrific. I like that. I said I'm keeping it on my list. I did, but I forgot to actually look at it. It's looking very nice. Now, it's in leg B. If it can start to close about 1477, that'll be fabulous action. So congratulations. You don't want to break under 1210 to 1190 now in this move, because that'll say, oh, back to the trading range. So let's do this, folks. Before we sign off, I'll be back a little later on with Tom. But mostly what I want you to look at is in the Dow. It is my Dow Quartet, GE, IBM, MMM, and UTX. It's only GE that's really been showing strength. And that's saying to me that the cyclical nature of this sell-off is still rife. It's still there. And then until those characters start to really move to the upside, what we're looking at are just bounces. And this goes into the category of a volume spike low, bounce. And this bounce can go on for another 2 weeks, maybe even 2 weeks. Maybe into, what was it, sell on Rosh Hashanah, buying Yom Kippur, something like that. So all I'm looking at here is that the upside, I think the majority of the move in the down, the S&P, has been made from the 15,371 low to the 16,669. Now you can get maybe a one-to-one, like an A to B equals C to D in that lightning rod move, and you can get to 16,700 to 16,800. But to do that, I think the dollar needs to keep moving higher. You need to see the weekly chart. It has to, by next week, Wednesday or Thursday, must take out the high of 16,669 that was made the week of the 24th. And if it's able to do that, then you might find just enough stocks to move higher. But this is also a period where you can look at other sectors that are just beginning to show a little bit of life and might give you a nice percentage move to the upside. We're trying to do that. We had some nice moves today. We'll see if they hold. I'll be back later today with Tom, and thank you for being here. Otherwise, check out my opening call. I think you'll find it very interesting. Thanks for being here. Have a great day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,